Hello guys, and welcome to my new video on YouTube. This video will be regarding my continuation model that I released yesterday in YouTube, in Twitter, sorry. So first of all, I want to clarify some things regarding my first model that I released, which is the time-based entry model and exit model. And it's the following: it's the logic behind the model that some of you still don't understand, and it's really simple. Imagine this is a 1 hour candle, for instance. Okay, and you want to trade candles like this that looks like an expansion candle. You don't want to trade, I mean, this is Asian, but you understand the logic. You don't want to trade candles that are just consolidating and have small bodies and big wicks. The candles that you are trading, you don't want to look like this. Okay, you want to trade a candle that look like this with a huge body. Okay, and when this happens, to create a candle with a big body, the logic says that the low, in case you are bullish, the candle is bullish, the low will be created on the first minutes of the candle. And why is this? Because in the case that it's created on the last half or the very last minutes of the candle, it will never create an expansion candle. For the reason, the low should be created at the beginning of the candle, so it will have time to create the body of the candle and then the close. That's the logic, and it's really simple. We want to create the low at the beginning of the candle, and we want to position it ourselves at the beginning of the candle below the low, and after taking some low time frame candle, so making a low time frame right. Okay, we want to position it ourselves here. This is the logic of this model. It's really simple. But this is not only happen at the beginning of the candle. When are the other sometimes the low won't be created or the high won't be created at the beginning of the candle. When we can anticipate this? When we have high impact news. For instance, when we have high impact news at 8:30, we can anticipate a big expansion. So let me find some candle that had news at 8:30. This looks like a news here, but this is London. Let me see. Alright, so here Friday, this is 4th of October. I'm not sure, I'm just improvising here. Yeah, but in this case the high of the candle was created here, so this is a failure swing of the 8 AM candle. You see that 8 AM fails to create this higher high, but it doesn't matter. I mean, you already know, I don't remember, maybe this was NFP, so you know that this candle will be an expansion candle because we have high impact news here. So in this case, we don't need to create the high at the beginning, because even the news will be released at the last minute of the candle. You already know that this candle will be expansion, so you want to position it yourself before that news. It doesn't matter if this candle, the 825 was here, or it doesn't matter if 825 candle was here. If you are bullish, you want to position it yourself just before the news, and you want to capitalize on the expansion of this candle. This is also time-based. Time-based is when you capitalize on an expansion candle. If you can anticipate the next 4-hour candle that looks like this, it will be a bullish candle. if you can anticipate that the next 4-hour candle, 6-hour candle, whatever, it will look like this, like an expansion candle, you just are trying to position yourself here. Okay, so this is a simple logic. If your drawn equity is higher and this candle didn't reach the drawn equity, you already know that the next candle will just continue going higher, right? So if this candle didn't reach its drawn equity and this candle will continue higher, and you miss this move, or you bought here and you exit here, for instance, and you want to go long again, where should be your long? Which is the most optimal entry point? It's always below the open in case you are bullish, or above the open in case you are bearish. So here are your ideal longs. You cannot improve on going long on the wicks always. And in this video is regarding exactly this candle here, the continuation candle, the candle that failed to complete its drawn equity. So next candle, we already anticipate that it will be a continuation going higher, and we want to position yourself below the open on the most optimal point. This is the continuation model. My models are all always logic. I'm not talking about nothing that's not candles, highs, lows, time, and price. The only thing I'm adding is the economic calendar, because well, actually this is also time. The economic calendar is just our roadmap that it's guiding us that when it will be an expansion candle, when it will price complete its drawn liquidity. If we go to on Thursday, we had the CPI of the dollar here of United States, and we had the drawn liquidity, which was very, I don't remember exactly which was the drawn liquidity. I think it was something like here. So when will this drawn liquidity will be reached? So of course will be reached with the high impact news. We can anticipate that even we are bearish here, price will not reach this level before the news. We'll left this level here for the CPI. So why you should for instance, going short here and stay like 4 or 5 hours holding your trade if you already know that this is time based. You already know at what time this drawn liquidity will be reached with the news. So why not just going short before the news and reach this drawn liquidity? Of course, you have to know 100% where is the drawn liquidity, otherwise your con will be gone. But when it's obvious where its price is going, just avoid this consolidation here, going short just before the news. Okay, so let's start with the content of this video, which is regarding the continuation model. It's that simple as I said before. We want, let's say we're bearish now, we want a clear drawn liquidity. We want price to create the swing high and fails to reach our drawn liquidity. So next candle will create a power of 3, which will be a continuation lower, and in the power of 3 it will create the wick, and the wick is where we are going to position it ourselves in direction to our drawn liquidity. Most of the times here it will be our time-based entry model, and after taking the drawn liquidity it will create the time-based exit model at a high time frame lower low. I mean, it will create a high time frame candle, and once we print the lower low, it will be our exit. It doesn't mean that it will create another high time frame candle halfway. So this is also another exit opportunity that we can exit here, price may reverse, create the next power of 3 of new candle, can be something like this, and continue with the trend lower. So in this model, of course, don't work when market is consolidating before, because a continuation model, it's only in a trending market when market is in a trend move for logic principles. Of course, if market is moving like this, you don't see any continuation here. It's just going from the high to the low. Every single time it's taking the high, then it's taking the low, and then it's going back to the range that price has created. This is a consolidating market when where it don't work not only the continuation model, but any model that you can use. It doesn't work in a market like this. For instance, here it's almost impossible to make money here. The market is not moving. It's really difficult to make money here where price is making 10 pips, then is reversing every single time. You see here, I would say it's impossible to make money inside here. Why? Because market is not moving. But it's different here. You see, when market is trending, you will see a continuation model. Most of the times the high will be created. You see here, the first 15 minutes of 4 AM candle, the high will be created. In this case, we can anticipate that this candle will be an expansion candle. You see, where are you? Let me see the time. 4:05, the high was created here. You see 5 AM, it's here again. So this is not the candle that you want to trade. You see in 1 hour how this candle looks like. You want to trade candles like this. Let's see at what time this low was print. You see, was print here at the beginning of the candle, just making a lower low, but you still have time to create an expansion candle. And where is your exit? When the new candle creates or prints the higher high. Here is the last candle of 3 AM, so you want to exit here. This is time-based entry. One is the 3 AM creating the lower low. Here you see this 3 AM, this is the power of 3, so you want to go long when prints or makes a low time frame right, which is here, and you want to exit once the market prints a higher high. It's that simple. In that case, price reverses, and this is now our new drawdown liquidity. We have several drawdown liquidities where market is about to reach. So here the high was already print, so 5 AM, we are just looking for a continuation lower. This is the power 3 of 5 AM. You see in 1 hour how the 5 AM candle looks like, and you see that the high drawdown liquidities wasn't reached yet. So next power of 3 are just short opportunities that we will look for my continuation model. So in this case, you see 5 AM, it takes the previous candle right on a low time frame, on the power of 3 of the next 1 hour candle. So this is the 5 AM candle, and the objective is not reached yet. So this is the next power of 3 of the 6 AM candle. So here is where you want to go short. On the power of 3 the candle, meaning if we are bearish, we want to go short above the high, above the open of the candle, which is here, this candle here, and this candle here is going above from the open. But this candle didn't took any low time from right, so from at least here we will wait and find our shorts. This is different case that happens here. So here could be our first short of this candle. And here, because objective wasn't reached yet, could be our second short. What is our exit? So here you see that took the first down equity, but look at the time. We are the half of the candle, exactly the 7:30 candle. We can exit here. Yeah, of course, if we have enough risk reward ratio. I don't know if it could be the case. Our second exit opportunity could be when we create or when we print the new candle lower low. In this case, you see in 1 hour, the 8 a.m. lower low was created here. Here we print the new lower low. In this case, it's exactly the same level, so we can wait for what? The next high time frame candle lower low. If you see in 4 hours, the next high time frame candle is here. Here prints the new lower low. If you don't see it better here. So here is the 9 a.m. lower low of the 4-hour candle. So here could be your exit. After taking what? The drawn liquidity. Of course, you can also exit here. This is the last candle of 8 a.m. So this could be also a failure swing. You see how 9 a.m. candle opens and goes above. It just ranking and consolidating here, and then finally creates the 9 a.m. lower low here. That could be also a good exit point. Okay. So let's find another example. You will see it's really simple and really easy to understand how this model works. Let's go, for instance, the next day. And let's see if we can find another setup here. Okay, so look at this candle here, 6 a.m. One is a high print at the first 15 minutes. So we can anticipate what? We can anticipate that the objective is lower, and this will be an expansion candle. You see that 6 a.m. fails to complete its run equity, so 7 a.m. will make what? It will just continue going lower. And you see 8 a.m. didn't reach our objective yet, so it's just another continuation going lower. So we will focus first of all on the time-based entry model, and we want to create the high of the 6 a.m. candle on the first 15 minutes. You see exactly that this is happening. Here, low time from right, and your most optimal entry. You cannot improve on that entry. But as I said on my 4th chapter, in my series you can see in Twitter, I will show you now. Here, if you go to my profile, going to highlights, you will see all my chapters. Here's the 5th chapter where I talk about the continuation model. But if you go to 4th chapter, you will see how I took my entries, and the first one is the most optimal one, which is this one. You cannot improve on that entry. But the second one is the most safe, which is in the order block. It's the simple of the candle that prints the higher high, and then we have an engulfing candle. So as soon as the next candle opens and touch the candle that has print the higher high is our entry. In this case, the stop loss is safe above the candle that has print the higher high, but look at pips. I don't place stop loss with less than 5 pips stop loss for spreads and things like this, and can just make a quick candle just taking this higher end and then going lower. So I prefer at least 5 pips stop loss, and this is our drawn equity. As always, what is our exit? Well, I will talk about it later. Let's focus here. You see our objective was not reached in the 6 a.m. candle, so we wait for which candle? 7 a.m. We want to go short above the 7 a.m. open. 7 a.m. candle open is here. Here is the open. But are we going short here? No, why not? Because this candle is not taking any low time frame candle. So you don't see any right here. But look at what happens at the very next candle. It takes the previous candle high. So in this case, this is a low time frame right, where we can go short here. So as I said, this is our first short opportunity. Well, actually it's this one, but for this one requires more experience and advanced knowledge. So let's focus only on the order block candle once the high is already print and we have created an engulfing candle. So next power of 3 of the candle will touch again the candle, and this will be a change in state of delivery. Remember, we want always to go short in case we are bearish on the left side of the curve. We don't want to go short while price is going higher here, because you can get into some drawdown if your stop loss is here. Let's say you will get stopped out, or even you are right. Imagine you are an isolated pattern trader. This is your turtle soup, right? And you are 100% sure that we are going lower. You place your stop loss like this, and you get stopped out, of course. Why? Look at the time you are taking the short. I also talk about this on the logic behind my entries, the 4th chapter that I just show you here. I don't know if I will, yeah. What I about training? Here, end of the hour. We do not trade at the end of the hour. Why? Because simple principles of price delivery. The algorithm is to be efficient is taking first the high if we are bearish and then going to the low. So next candle, next hour, will print a new higher high, then we'll take a low time frame right because everything is fractal, and then we'll send price lower. Okay. All right, so 7 a.m. power of 3, we want to short above the open, but only after taking a low time frame right. You see, this never happened until this candle 7:05 take this high, and then we can go short. Your stop loss placement could be something like this, aiming for 3 hours. Regarding our drawdown equity, you will see that this level will never be reached, so it's safe. And what's happening here, price expands lower and the drawdown equity is not reached. So 8 a.m. is just another short opportunity here. This is 8 a.m. open. So this is also a version that I talked about on the 5th chapter, which is going short on the last quarter. It will create another short opportunity, and we will focus on finding a 1 hour, 1 risk reward ratio move. As always, go short after taking a low time frame right and above the open. So here could be our short opportunity, and because we are really late on the move, we are only looking for 1 hour, a blindly 1 hour here. You see, this is another continuation model. You are going short with a clear drawdown equity above the open, and with the logic that we are in the last quarter, we are not aiming for 3 hours. I mean, this is really difficult that this is happening. You are late on the move. What's happening if you are aiming for 3 hours? That it will stop you out. In this case, you will probably stop you out at break even, and then price continue lower. But this won't be the case of all of the times. So as I said, this is first long opportunity, second one, the power of 3 of 7 a.m. candle, 8 a.m. power of 3, and finally, where is your exit? When the high time frame candle prints the lower low. The lower low of 9 a.m. is here, but you see the drawdown equity is not reached, so in this case you can just exit when the drawdown equity is reached. That's simple. And in 1 hour looks like this. you see this is the power 3 of 7 a.m. This is the power 3 of 8 a.m. and here in 4 hours it prints the new 4-hour lower low, but it prints before the taking the trend equity, so you exit here. That easy. Okay, so let's find another example. See how this week was really difficult to trade looking for continuation models because it was just consolidating. You don't see expansion candles, and if you go to previous week you'll see big candles. Every single big candle, the next the next candle, it will make another continuation. Okay, if we go to USD CAD, that I remember this candle this week was you see trending move, trending market here. It will be really easy to identify continuation models here. So most of the times the swing low of the day, it will be created with a time-based entry model. It will create at the first 15 minutes of the candle of the hour, and then I don't know, let's go to day. I think this could be good enough. This day here, okay? If we are going to print higher highs every single time, the market is going higher and higher and higher. I don't know exactly the liquidity, probably something like this, okay? If we are aiming higher and market is just printing higher highs every single time, you see that here 4 a.m. price failed to complete this level. So this is just a reverse retracement, it's never a retracement. So we will find a continuation here. So here 6 a.m. focus on this power 3 here. And what do we see? Are we going long on the last minutes of 5 a.m. candle? In my opinion, it doesn't make any sense. Why? Because, as I said before, the next 6 a.m. candle will just create a low time frame right. So in 1 hour, you see a right. You want to go long below the open, which is here this week. After taking a low time frame right, you see in 5 minutes, the most ideal long is here. You cannot improve on going long here. It's impossible. And this is just a continuation model. Okay, that's simple. You are continuing the trend, going long on the beginning of the candle. Again, this is also time based. Why? Because you are anticipating an expansion candle. Where is your exit? So the trend equity was taken at the beginning of 7 a.m. Maybe this is not enough for you, 10 pips, at least it's not enough for me. So where is your exit? When is the new high time frame candle you print? The next high time frame candle prints at 9 a.m. So we will focus on going or exiting our position here. Remember, this is our long. You cannot improve on going long here. If this is too risky for you, just do exactly the same. Wait until we have an engulfing candle with the candle that has created the lower low, and just going long here. You see this candle finally creates prints the body outside this candle here. So you're just going long when the next candle creates the power 3 and touches again this candle that has created the low. So this could be your long. Your stop loss in this case is safe below this candle. As always, 5 pips minimum for me. I don't know if it's your case or not, but at least it is for me. And what is your exit? When the new high time frame candle is printing the higher high. And here is your exit. It's logic, it's mechanical, it's how a system should be. If you are trading patterns, if you are trading something that is not logic, you will at the long term you will lose money because you don't know what you are actually doing. Actually, let's see here. It has created another continuation model here. You see that the 9 a.m. wasn't the 9 a.m. 4-hour candle didn't print a higher high. So where are you going long again? You see 10 a.m. This is the open, and we want to go long below the open. You see that the 9 a.m. power of 3 takes a high time frame, low time frame right, sorry. So created this long opportunity here again. In this case, it's just creating another low time frame right. This maybe in 15 minutes or 3 minutes can look like, yeah. You see, we were playing inside this candle. So we want to write the low of this candle so we can aim now for the high. But just going long here at the power of 3 of the new candle after taking a low time frame right is enough, and you are aiming to create the higher high here. 5 pips minimum stop loss. You will see that it will never touch this level again. It won't stop you out. The trend is higher, so why not just going higher with the trend? It's really simple. You see that the liquidity wasn't reached, so I mean, maybe it's not the best time. Yeah, well, actually it is, but I'm not trading New York unless we have news. But you see that it's really easy to trade in a trending market, this model. Okay. All right, so let's go now to another example on EU. I know that most of you are trading EU or GU, not USD CAD. And let's find another example that in this case it contains a failure swing, which is another version of this model, and it's basically that exactly the same time-based entry model and the continuation here. So in this case this happened on the last candle of the hour, so the next power of 3 here it will be created here, and it don't need to make another low time frame right here because this already happened on the last candle of the hour. If you don't understand what I just said, you can go again to my profile, highlights, and find my third or second chapter, I don't remember. My third chapter, I talk about the failure swings, and you will understand why price don't need to make another, don't need to print another lower low here at the new hour, and it's enough to just create the pair of 3 and you are going long on the next pair of 3, and your stop loss is safe below this low because for algorithm it doesn't need to reach again this level and make another lower low. It doesn't need to do this because this already happened. So let's find a setup that contains a continuation model and a failure swing. So I think, I don't remember, to be honest. Let me check here. You see, it's really difficult to find a continuation in a consolidating market. So let's go when market was trending. So we should go to September. Okay, so look at this example here. That's interesting. So this is your trend liquidity, and you see that the trend liquidity wasn't reached with the 3 a.m. hourly candle. So next 4-hour candle prints here, and we want to continue with the trend going short below the open. If you realize, the 4 a.m. candle takes this high here, so you can just go short here. And remember, we are really late on the move. The most ideal entry, of course, is here above, but you're at the last quarter and you just need to find one risk-reward ratio. You see, we are just going short on the last quarter, aiming for 1 hour. This is enough. This is a free move. This is free money. You already know that price will continue with the move, so why not? If the price is giving you for free a 1 risk-reward ratio, why not taking? I don't understand the ones that said I'm only aiming for 3, 4, 5 hours. I mean, if the market is giving you free move of 1 hour, you are risking 1 or 2% here. I mean, I cannot comprehend that. Well, you'll see in 1 hour, this looks like this. You see, takes and then reverses, but you want to go short above the 4 a.m. open. You exit here, and then price reverse, but you don't care because you exit here. Well, anyway, I wanted to find a failure swing case scenario. Let me see, 23rd. Well, you see here, we don't have any power of 3, so it's that simple as, well, this is 1 hour. Yeah, look at this. Well, this is not a failure swing, it's just the first version of the continuation model, but you see that the high is already print. Okay, the high was print already, so you don't need at the new 3 a.m. candle to come back here and make another high. This already happened. You don't need to make another high. So you just focus on continuation, on continue with the trend. If this is your trend liquidity, okay, this is your trend liquidity, what is your most optimal short? When the 3 a.m. candle prints here, you see this is the 3 a.m. candle, and surprise, it creates a pair of 3, and this pair of 3 takes the previous candle. So this is a valid scenario of my continuation model. Remember, aim for 5 pips stop loss, and it gives you a 3 hours at least. You see in this case it's 4 hours. And where is your exit? You can exit at new 4 a.m. lower low. This case it's, well, what a move. Well, anyway, the new 4 a.m. candle is printing the low here, so here is your exit. Isn't that objective, obvious, simple, effective? A model should contain all of this, otherwise you will get lost doing, I don't know. So, but I didn't find a day that contains a failure swing. Maybe the next day. Let me see here. Yeah. Well, no, this is not a failure swing. This is just, again, the first version. You see, the low was print here at 2 a.m. So if we are bullish now, aiming for this high, you don't need the price to come back here. Remember, the low was already print. This is not how price move. Price deliver So the low is already created. So next candle will just print here this is a bullish candle, and continue higher. In this case 3M is here, .4 AM is a continuation higher. It's not exactly how it looks like, but you can understand. So you will need to focus on finding your setups below the open when going bullish. And what you want to see is exactly what you are watching here. Here, 3 AM. See? This is a part of 3 AM. Takes a low time from right, bullish objective, so going long after taking a low time from right. Sorry, this is the part of 3. And from here is our shorts, only after taking a low time from right. Exactly the same happens at the new 4-hour candle. Here, this white candle, I remember because I took this long. Here, low time from right at the power of 3. This looks like this. Well, you will see it better just going to 1 hour. You see, focus only on the power of 3. If you go long on the power of 3, you will always get our most effective and optimal entries. Where is your exit? Remember, 5 AM prints the new 4-hour high time frame candle, so you want to exit here. That's simple. And if I am not wrong, yes, look, I just found a failure swing scenario. We're still bullish. I don't know if this was our down liquidity. I think it was. If we start still bullish and price failed to complete its run liquidity, of course, if we went long here, we are exiting on the new high time frame higher high. Even the price doesn't reach our objective. Imagine you go long here. Why not taking this exit opportunity? Look what happens if you don't take this exit opportunity, even you know the price is going higher. Just exit here and go long again here. What happened here? That we had 10 AM news. So if we have 10 AM news and the low time from right happens, look, this is a really similar scenario that happened and I explained before. Look at this candle. We were playing inside this candle, so we want to take this low. And when this is happening, it's happening at the end of 9 AM candle. So because this already happened, this already happened at the end of 9 AM candle. The 10 AM candle doesn't need to go back again here because this already happened. So 9 AM can already just go higher from its open. So where are you going to position it yourself? If I said that 10 AM was a news, it's really difficult to go long on the power of 3 of 10 AM. So you want to go long at the previous candle or when the 9 AM end of the hour takes a low time from right, which is this 15-minute candle low. So you want to go long here because this is a failure swing. This for the algorithm is already the 10 AM candle. If you see in 1 hour, do not see that this low is being taken, but for the algorithm did. In my eyes, this looks like this. And look how beautiful is this model here. And you see that the objective is not reached. So here and finally here was reached. And continue the trend higher. Well, so let's focus here. A failure swing is when, well, there are so many types of failure swing. You can go to my third chapter and see which is the failure swing, but as I said, to me this looks like this, okay, but it doesn't exist. So this low has been taken, so you can go long here. Here could be your first long, something like this could be a good trade, or just going long here. And if you are going long here, your stop loss is safe below the low, because you already know that this is a failure swing of the 10 AM candle. The 10 AM candle to me has created this low. Okay, I see the 10 AM candle like this, so this is safe. Okay, and finally, boom. Alright, so I think you understood all the possible scenarios in a continuation of the continuation model in a trend market. I'm finding a setup that happened, I don't remember if it was this week or the previous one, because I was sick this week and I didn't trade a lot. Well, you can see here another failure swing scenario. You see the very last candle of 4 AM take this low, so next 5 AM candle don't need to make another low high here, because this already happened. You can just go short or here, or when this prints the part of it. You see that this was really teeny, but it's enough. Imagine for a spread and whatever, it enter you here, well, it's enough. This case makes this low and reverses. Oops. But I can find here, you see, well, I already talked about this one. You see, this is another failure swing scenario. When the low time frame right happened at the very last candle of 3 AM. So the new 4 AM candle don't need to go back here, because for the algorithm this already happened on this candle. So your long is at the very last candle of 3 AM. Okay. Well, I don't think that I will find. You see, I took also this one. When the low time frame right happened at the very last candle of 2 AM, so 3 AM don't need to make another, don't need to print another higher high. This is a continuation model. I see the 3 AM candle like this. Even this never happened. And I went short here. And I exit my position here after taking the dragon liquidity. Something like this, like 5 pips, 3 hours, enough. Okay guys, so well, we can see another continuation. I mean, this is happening every single time. Look, you'll see also this one. But first of all, let's go here. this was SMT with 0. You can check it by yourself. So because you see that the variations here, you created this lower low, print this lower low. In my opinion, sorry, in my eyes, it looks like this. So 5 AM, because the swing low was already print, don't need to make the lower low. 5 AM open is this candle. Well, this is the part 3. This is the low time frame right. Your long is here. And where is your exit? When the new 9 AM prints the higher high. See, look at the time. Surprise. Isn't this random? The 9 AM prints higher high here. You cannot improve on that exit. It's impossible. And what I said at the beginning of the video, time-based is when you anticipate an expansion candle. If we have news at 8:30, why going long at the beginning of 8 AM? If we anticipate an expansion at 8:30, why not going long here? Actually, I took also this one. Look what's happening. It's taking the 6 AM low here. And look that beauty. And you're exiting at the 9 AM higher high. Isn't it a time-based entry model and exit model? Also, this is a continuation because, I mean, I didn't know, well, yeah, that could be the both model at the same time because the objective wasn't reached. So prices just continue going higher at the part of 3 of 8 AM, the part of 3 of, well, okay, it's here. This is a part of 3, but you don't need to go long at the beginning of the 8 AM candle. First of all, because didn't take the 6 AM low, so a high time from right didn't happen, and second of all, because secondly, we know that the expansion will take place at 8:30. So why going long here? Is this low relevant? The 7 AM low, it's this one. Is this low relevant? No. It's this one. So this one is still 30 minutes left for the expansion candle. If this one be expansion candles, why going long here and got into some drawdown? Imagine this is your stop loss. For the spread, whatever, stop you out and then makes the real move. Doesn't make any sense. Just wait until you know 100% that will be an expansion candle here. So 8:30, boom. Okay, so I may make another video regarding my models. I don't know when. Maybe you can ask me some questions that you may have, and I will answer the questions in a new video. But I think it's enough. You can study by yourself. Remember, in a trading move, in a trading market, you want to find a move that the previous candle or previous candles failed to complete its drawn equity. You see here, imagine this is an hourly chart, not a 5-minute chart. So imagine this is an hourly chart. So because this failed, actually we are also in the last quarter, and we will find our entry last quarter going into an expansion candle here below the open. I mean, it's things that are obvious, logic, simple, and effective. I don't know why no one is talking about this, because this is the reality of how the market is booked. I'm not talking about fair value gaps. I'm not talking about standard deviations. I'm not talking about inversion fair value gaps. I'm just talking about highs, lows, time, and price. Anything more than this is just noise. If someone is adding things that it's not what I just said, it's marketing stuff. He tries to sell you something, okay? So once that's said, thank you for watching. And again, please, if you have any doubt, ask me in comments. If you want to share your feedback, I will read you and see you next one.